Well, guys, things took a turn for the worse today. Yeah, the VIX went up 74% on the day, and we had every index massively in the red, with the Russell leading the losses down almost 4.5%. Yeah, the S&P went down 3%, QQQ went down 3.6, and we had the Dow Jones down over 2.5%. Yeah, not the best day. And this is after we got a 25 basis point rate cut. And you'd be thinking to yourself, wait a second, Stas, we got a rate cut. Don't stocks like rate cuts? Well, yes, they do like rate cuts, but they didn't like what Jerome Powell had to say and the Federal Reserve about the future, the forecast of rate cuts for 2025, which I got you guys, of course. We're going to break that down. So hit the like button. Do not forget to subscribe here on YouTube. Join that free email list as well. Why not? I send you my top 3 stocks every Monday. That's linked down below. And let's get into it. So pretty obvious what's going on here, right? SPY got destroyed. All the indexes got nailed at about 2 p.m., right? Right when we got, the insight here on the interest rates from the Federal Reserve, which obviously we're going to get into right now. So we tanked. We completely free fell. You get the point, whatever. And it's bad across the board. SPY, QQQ, right? The Russell, which led the losses. Now it's back to 2,200 points. You name it. It's not looking pretty. And if I pull up the 4-hour chart on the Russell, now we're right by the 180 SMA. We're kind of right where we were back in the middle of October, end of October. So we've lost about, 2 months worth of gains. The Dow is at about, let's see here, right around the 180 SMA, slightly under it. It's kind of where it was early November. So we lost about a month and a half of gains. And SPY looks pretty good, guys, honestly. I mean, all these charts still look good regardless of this drop. But SPY is down under both moving averages, pretty much a falling knife at this point. Same with QQQ. So we get it. It's not looking good, right? it's like we get it, Stas, right? So what is going on? Well, the Fed, and by the way, QQQ here is holding above the 180 SMA 4-hour chart. This pullback looks pretty healthy, but why the markets are freaking out? It's because we are going to get less rate cuts than expected in 2025. So let me actually pull this up here and break down what's going on. This article here breaks it down pretty nicely, guys. So let me plop my big old head down here to the bottom right. You hit that like button and make sure to subscribe. You got that? You hit that? Perfect. Awesome. We're rocking and rolling. And you guys can see here the Federal Reserve lowers interest rates again, 25 basis points, but hints at fewer cuts next year, which, of course, I've said this millions of times, and you guys know stocks are forward-looking vehicles, and, well, they're pricing that in. And honestly, at this point, let's be honest, guys, stocks were looking for a reason to sell off. They were looking for a reason to sell off. So, I mean, you saw the charts for yourselves on the indexes. We still look really good. This dip will probably get bought up. Let's be real here. But in the short term, again, stocks were looking for a reason to sell off. And now the interest rate, the benchmark rate, is at 4.25 to 4.5%. And now, get this, we're a full percentage point lower from where we were in September. So if you think about it that way, guys, the Fed's been pretty aggressively, 1 whole percentage point in about 3 months. I mean, that's a pretty aggressive month there. And we know we got, it started off with the 50 basis point cut. So we got that big cut. Then we got a 25 and another 25. So they've been pretty aggressive. I mean, not overly aggressive, but they've cut 1% in 3 months, right? And on average, members of the Fed's rate setting committee expect borrowing costs to fall by another 0.5 percentage point in 2025. And that's less than 3 months ago when they were projecting a full percentage point in rate reductions next year. So that right there is why the stock market is selling off. Previously, they forecasted, again, 50 basis points or 1 full percentage point, whatever. But now they're expecting 50 basis points of a cut in 2025, right? So Powell said here, it's kind of common sense that when the path is uncertain, you go a little bit slower. Makes sense. And guys, let me say this right now. My position here is I don't want the Fed to cut rates way too aggressively, right? I'm in the camp of being slow, being, safe with it, in other words, because the last thing we want now is inflation to spike back up, right? That's the last thing we want. And it potentially might already with Trump coming in with the tariffs, right? We're going to see potential. I was reading in this article, deportation, mass deportation. We'll see how that goes. That could, influence inflation here a little bit. So let's come down a little bit more. You guys obviously know inflation has come down a lot. So the Fed has done a good job overall, but they're still not, at their target. The target is 2%, guys. That is where we have to get to. And let's come down here a little bit more. We can see here grocery prices have risen 22% since Biden took office, while average wages have risen 19%. Well, that's a whole nother topic for a whole nother video. Make sure to subscribe to my second channel, guys. Link down below, where I do reaction type content to personal finance videos from TikTok. Stas Talks Money is that channel, or just type in Stasserfest. It's also linked down below. Make sure to go check it out, guys, and subscribe. But we can see right here, economists warn that some of Trump's policy proposals, including tariffs and mass deportation, could lead to higher inflation. Chair Jerome Powell has said it's too early to speculate about that. It's another reason, though, for the central bank to be cautious about further cuts in interest rates. So, that's the gist of it, guys. There's no, secret or something hidden, like, why are we really selling off? That's why we're selling off. It's because the Fed is signaling less rate cuts than previously expected, right? And that's what the stock market doesn't like. It doesn't like when, something positive or is expected, or not necessarily positive, but when the stock market projects something to occur and then something else is actually now what the Fed's projecting. They changed their projections a bit. They've revised them, not in the favor of the stock market, I guess, in the short term. If something like that happens, yeah, we're going to get this type of reaction, guys. And like I said earlier in the video, I fully suspect that this dip will get bought up. And honestly, guys, I'm pretty excited because a lot of stocks today got demolished. SoFi got hit 8.5%, which obviously we talk about SoFi here on the channel. This could be opening up a nice opportunity in this one. Nvidia got demolished down to about 128. Now it looks like it's recovered a bit after the bell to 131, which is good news there. But a lot of stocks got hit, man. A lot of stocks. Amazon, Palantir, you name it. Microsoft, Meta, Airbnb, Alphabet now is back to 190. Google was just at, I think, 205, whatever it got to. So, yeah, we're getting a nice, healthy dip in a lot of these stocks, which it's been a long time coming, right? And like I said, the stock market was looking for a reason to sell off, and it got it. It got it today, guys. So what do you think? Let me know your thoughts in the comments. Hit that like button. Don't forget to subscribe. Check out my Patreon if you want to keep up with what I'm doing every week in my portfolio, and join the email list, which that's free. I send out my top 3 stocks every Monday, and you might as well get your free stocks for a moo, which if you open up your account using that link down below and you deposit at least $100, you get 5 free stocks. Deposit at least $1,000, you get 10 more free stocks, and overall, your uninvested cash for now will earn up to 8.1%. APY. So guys, use that link down below or go to stocksurfest.com/Mumu. Get your free stocks. And with that being said, cheers. I'll catch you in the next video.